Defensive stocks helping the markets bounce back from morning losses Thursday. Tesla doing a quick 180. For more on the markets, we're joined by Art Hogan of National Securities. Welcome back, Art. Tesla really just turning around. It initially fallen 4% after announcing the capital raise, recall of sport utilities, and now it's up 5%. Go figure. Is it okay for it to keep defying gravity the way it is?
Generally not, but this is an interesting definition of gravity for Tesla because it's got a couple of things. First of all, people are betting on the future of Tesla, and part of that's the automobiles. A large part of that is what they're going to be able to do in battery technology. I think the fact that they got their operation open so quickly in China is exciting, but we don't know when that's going to get back up and going. It is amazing what their total addressable market it is, and they seem to be the first to market in a real sense in electronic vehicles, which will be the future. Very small part of vehicles right now, but every year that percentage is going to get higher. I think the scary part about Tesla is that at some point in time, 2 weeks ago, the percentage of the float that was short was close to 30%. The outstanding shares, 30% of those. So when this worked against those shorts, that caused a squeeze. And when short squeezes come to an end, you tend to have a flattening and a retracement of some of that move. So it's not for the faint of heart, this stock.
So if you don't have it, you wouldn't crowd into it at this point?
I don't think you need to crowd into this one, especially with the parabolic move. It's up some 80% on a year-to-date basis. I would say, and regardless of what that company is, it's probably gotten ahead of itself.
Yeah, the stock's probably think tripled since October.
Right.
Just wondering whether complacency is a concern for you. I mean, we had the markets initially down today on word of the huge spike in confirmed coronavirus cases in Hubei province in China, and now the markets are already back up.
Right. I think one of the things that's misleading about the increase in numbers, and it looks exponential when you've saw yesterday the increase didn't seem to be as large as the last report we got, and all of a sudden you have this new spike. But the procedure there, the process they're using to actually account for cases changed overnight. So now we actually know what the real number is. So I think that once we knew that, and this wasn't 15,000 that was coming from some other place. So we didn't hear about 15,000 people in another province or another country, heaven forbid. That would be extremely bad news. I think this is more of we've actually changed the way we're counting. And this is the real number that we know. We're trying to be as transparent as we get. So I think the market's taking that with the same kind of caution that it's taken this entire process.
And Art, looking at the market movements, are you concerned about the breadth of the market? Well, rather than breadth, it seems as though really the big high-tech, the big cap names are really moving the indexes, the funds, whether it's Apple or Microsoft and the like. Does that concern you?
Yeah, this is a story we've been talking about for at least a year. Certainly this year, and the move from October to today has been driven in large part by a barbell approach. You have momentum names on one side, and I think we all know those names, whether you mentioned 4 of them or 10 of them, that do very well. And they do very well because I think people look at them as cash flow stories agnostic of economic growth. They're just popular brand leaders that are going to grow regardless of how much the global economy slows. On the other end, oddly enough, of this barbell is a very defensive group, right? So you've got consumer staples, you've got telecoms, you've got the REITs and the utilities, and that group is trading at an amazing multiple because people are looking for yield. So when the yield on the U.S. 10 years at or about 1.5%, and you can get 3% from a utility, that looks like a great bargain. That's where I'd be careful, but those are the two groups. In the middle of that is stocks that have gone nowhere since October, right? So you've got a whole chunk of the S&P 500 that is trading at, below their all-time highs and certainly, hovering around their 50-day moving average. So either the market has to broaden out and the middle has to catch up a bit, or we're probably due for a pullback on either side of that barbell, which would probably be healthy.
But overall, your thoughts on where the market's going from here? If you had money on the side, where would you put it at this point?
I still think this market has a way to go. Our target for the end of the year is $34.50, and that's predicated on a $188 S&P 500 earnings. And that's a combination of the top-down and bottoms-up earnings estimates for the S&P 500. We're putting an 18.5 multiple on that, and I think that is justifiable. Now, do I think we're going from here to there and stopping, or do I think we're getting there in a straight line? Absolutely not. There will be reasons, and you can make up a lot of them in your mind right now where this market might take a breather. We work our way through the election cycle and Super Tuesday and get really into the heart of it. And if the market gets nervous about who the front runner is on the Democratic side, sometimes that causes a bit of agita. Or we may just, get to that rationalization that we've come too far too fast. Or, one thing that might happen is the market's got an expectation that the Fed might cut rates this year. And I think the Fed's got an expectation that they'd really not like to cut rates. So we may get to a point where the Fed says, our balance sheet is large enough for the overnight repo, so that psychology of them adding liquidity gets removed, and they don't do anything on monetary policy. Any one of those things might jar the market a little bit, but I think in general we're in a pretty good place.
Okay, still optimistic. Thanks a lot, Art. Appreciate
you.
your thoughts. Our thanks to Art Hogan of National Securities. I'm Fred Katayama, and this is Reuters.